stock market analysts from Bank of America say there are two areas within the tech sector that are still undervalued and are expected to grow at a massive rate into 2021. And in this video, we're going to take a look at 6 companies within those two areas of the tech sector that have some high expected growth over the next calendar year. Overall, the tech sector is still rated as overweight from Bank of America, and they do expect the overall technology sector as a whole to outperform the total market in 2021 as we see an economic recovery. But within the tech sector, there are two areas that they believe are still undervalued and are poised to see some massive gains over the next calendar year, and those are semiconductor stocks and software companies. And in this video today, we're going to combine these two areas of the market and discuss 3 semiconductors and 3 software names. These companies are some of the solid and most reliable companies within each of those areas of the market. These are companies that have seen massive gains but are expected to continue their market dominance over the next 3 to 5 years. These are companies with high revenue growth, high profit margins, and high expectations to continue that growth over the next 5+ years moving forward. If you're new, everyone, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy and sell, and I always discuss any major market news and headlines. And in this video today, we're of course going to focus on 6 tech companies that may be a buy for 2021. So please hit that like button, subscribe to the channel for daily videos about the market, and we're going to jump onto the first stock in today's video, which is Adobe. This is one of the strongest software companies in the world, and they currently trade for around $470 per share. But with fractional trading being available on almost every platform across the world, you can buy in for as little as $1 into this software giant. So as I mentioned earlier, we're going to go over 3 software companies and 3 semiconductors, and we're going to rotate between the two. So I'm going to start off with Adobe, which is a software company, and the next stock on this list is going to be a semiconductor, and we're going to rotate back and forth as we go through the top 6 companies. So Adobe currently trades with a market cap of $221 billion. With a forward PE of 46, this is one of the best software companies on the market who has countless products that are used for both creative and business purposes. And this company has so many different products that are used worldwide that I believe they're going to be a name brand in the software industry over the next decade without any issues. You can see the long comprehensive list of all these different services they provide for monthly subscriptions. And the subscription-based revenue is such a strong revenue stream that is only growing in popularity, and Adobe's infrastructure is set up to capitalize on that transition in the market. And if we take a look at some key statistics, they have extremely high profit margins. As a software company, their profit margin sits at around 31%, operating margin sits at 32%, insane return on equity at over 35%, revenue comes in over the past 12 months of over $12 billion, quarterly revenue growth up 13%, quarterly earnings growth up 20%, and overall their current ratio from the balance sheet sits at 1.44. So we see some solid statistics from Adobe when taking a look at a quick overview of their financials. So overall, these companies are growing rapidly. We see massive growth in the share price, revenue each and every year is growing at a significant rate, and Adobe is posting some high profit margins, which is great to see. Moving forward, the company is expected to grow their share price by around 19% over the next 12 months and is rated as a buy. We have 10 strong buys, 10 buys, and 7 holds for Adobe, and over the past 6 quarters, we've seen 4 positive earnings per share surprises and 2 in line with expectations. But they have not missed an earnings expectation over the past 6 quarters, and annual revenue is expected to grow at a massive rate. We're expecting 32% annual revenue growth into 2021. And if we take a look over the next 5 years, Adobe is expected to grow at 17.4% per year over the next 5 years. And from Yahoo Finance, we see a buy rating on the company, and the 1-year expected price target sits at around $552 per share, leading for some massive upside from Adobe's current share price in that $470 range. The second company on the list today is Qualcomm. This is the first of 3 semiconductor stocks on today's list that currently trades at around $144 per share, and they are up close to 72% on the 1-year chart. They currently trade at a market cap of $165 billion, forward PE above 20, and a current dividend yield at 1.78%. So this is a company within the semiconductor space that is going to really grow with the expansion of 5G. Their components are going to be in a lot of 5G devices across the world, and this is a company that is really expected to grow at a massive rate moving forward. If we take a look at their current financial stats, we see a profit margin very healthy of over 22%, insane return on equity at over 94%. The company's total revenue over the past 12 months comes in at over 23 billion, and that quarterly revenue year over year, even during an economic slowdown in a pandemic, has grown by over 73%. If we take a look year over year earnings, astounding rate of over 400% growth, and they have a beautiful current ratio coming in at over 2.13. So their balance sheet is strong over the short term. Absolute no worry with regard to short-term financial position and short-term financial health. So even if this tough time continues, this company will be very healthy and be able to maintain operations very easily. If we take a look at their expectations moving forward, still rated as a buy, 9 strong buys, 13 buys, 7 holds, and only 1 single sell. And this company absolutely crushes analyst expectations. Over the past 6 quarters, we've seen 6 positive surprises, and each and every time they destroy what analysts are expecting. Over the past 2 quarters, they've beaten earnings per share estimates by over 20% each time. And annual revenue into 2021 is expected to grow by 39%, followed by 49% estimated annual revenue growth into 2022. So this company is expected to grow at insane rates. If we take a look over the next 5 years, we're expecting 24% annual growth from Qualcomm, which is absolutely incredible, and is still rated as a buy from Yahoo Finance analysts. And the current share price expectation sits at $158 per share. Very nice potential upside from where we sit today, around that $144 mark. And if we take a look, the company is a dividend payer, yielding around 1.78%. They only pay out a safe 37% of their earnings as a dividend, and they grow that dividend at an average rate of 9% per year, which is a solid dividend growth rate to see. So for the first semiconductor stock on the list today, a lot of strong upside potential, and we should expect Qualcomm to continue to perform very nicely moving forward. Stock number 3 on our list today is the second software company, and it is Salesforce. Ticker CRM, currently trading in that $246 range. They are up 60% this year and have a market cap at around $237 billion. So this is a company that has just made a massive recent headline announcing that they are in talks to buy Slack. Slack is another publicly traded software company that's been growing at a massive rate from the new work from home environment and the remote working situation. And overall, Slack is expected to be a nice software company and maybe a huge addition to Salesforce's ecosystem. So this was most recent news, and we should be getting a deal next week. And when it gets done, I will for sure mention what happens with the deal within a future video. But if we take a look at Salesforce's current financial position, they have a profit margin over 12%. Over the past 12 months, they brought in over $19 billion of revenue, and their revenue over the past 5 years has seen some beautiful exponential growth. Each and every year, new top highs in top line revenue, and each and every year, significant growth in that revenue number. If we go back to this Yahoo Finance report, you can see here that quarterly earnings have grown at a massive rate, total cash on the balance sheet of over $9 billion, and a current ratio sitting at 1.14, so it is considered safe, and their short-term financial position is considered strong and sustainable. If we take a look moving forward, the company has a buy rating right now, 12 strong buys, 22 buys, 6 holds, and 1 sell, and another company where over the past 6 quarters, they've absolutely crushed analyst expectations, and when they have seen a positive surprise, they have crushed on each earnings per share report. And over the next 2 years, we're expecting 21% revenue growth in 2021, followed by over 43% revenue growth in 2022. And Yahoo Finance predicts over 16% annual growth from this company over the next 5 years, each and every year, and the average price target sits around $280 per share, with of course a buy rating on this company. So another software brand with some huge acquisition talks to maybe acquire Slack, and this is another brand that has been expanding at a massive rate. Revenue continues to grow, and maybe a nice addition to your portfolio for tech stocks into 2021. Moving on to stock number 4, we have semiconductor number 2, and it is Nvidia, one of the most popular semiconductor stocks in the world, up 145% on the 1-year chart. Massive market cap sitting at over $320 billion, with a forward PE of 53 and a current dividend yield at 0.12%. That dividend yield is so small, I wasn't actually going to mention it in this video, but because they are a dividend paying company, I did have to throw it in. Although this company's growth rate and your total return is going to come primarily in share price appreciation, I have to admit they do pay out a very tiny 0.12% dividend yield. With regard to their current financial position, they see beautiful profit margins of over 25%, over 28% return on equity, which is a nice number. They see beautiful quarterly year-over-year revenue growth of over 56%, and earnings year-over-year have grown by 48%. So insane growth numbers from Nvidia that match the future growth of the share price. They have a current ratio of 3.92, so absolutely no worry with regard to their short-term financial position, and as a lot of these tech companies are, they have very strong balance sheets. Not a lot of long-term liabilities, not a lot of debt on the balance sheet, which just ensures that this company will remain operational over a long period of time without any financial hardship. Taking a look at the analyst report, Nvidia is rated as a buy, 8 strong buys, 23 buys, 7 holds, and only 1 single sell. Another company that has absolutely crushed earnings per share expectations, 6 consecutive positive beats, and when they do beat, similar to the other companies, they beat by a decent amount, averaging over 10% surprises on earnings per share. Annual revenue is expected to grow at insane rates for this company that already has a market cap of $320 billion. In 2021, we're expecting 50% revenue growth, followed by 81% revenue growth into 2022. And overall, the company is expected to grow by over 21% per year over the next 5 years. We have a short-term price target sitting at $587 per share, so a lot of significant potential upside from the current share price around that $530 range. And this company overall is expected to grow at a huge rate. They've already seen some short-term growth of 145% over the past year, but this is one of the names that is expected to continue rolling into 2021. Moving on to stock number 5, the third software company on the list today is ticker NOW, ServiceNow. And once again, another company with a high share price, but of course fractional shares allow you to buy this company with whatever amount of money you decide. They are up 83% this year and have a market cap at around $100 billion. Another company with a profit margin of around 16%, beautiful return on equity of 34%, and this software brand continues to grow at a nice rate. Quarterly revenue is up over 30% year over year, and overall the company has a beautiful balance sheet sitting at a current ratio of 1.4. Analysts have this as a buy right now, a strong buy with 9 analysts, 19 buys and only 5 holds. No one is selling out of this company right now. Another brand absolutely crushing earnings per share expectations, all 6 positive beats, and each and every time they do it by over 10%. And another company within the software space that is absolutely expected to explode over the next few years as we continue to transition to a more work from home environment, remote work, software first focus for conducting business. 2020 revenue expected to grow by around 30%. And in 2021, where this sector as a whole is expected to grow, we're looking to see over 61% forecasted revenue growth over the 2021 calendar year. And overall, the company expects to grow at 27% per year over the next 5 years, with a buy rating from analysts from Yahoo Finance. The 6th and final company we're going to take a look at today is another semiconductor brand, the 3rd semiconductor stock on today's list, ticker TSM. So before we jump into TSM, we have gone through 3 software companies already, and now this is the 3rd and final semiconductor brand in the area of the tech sector we're expecting to explode over the next year. Ticker TSM currently trades around $97, massive increase of over 83% on the 12-month chart, market cap of around $447 billion. This is actually one of the largest companies on the stock market. They have a PE forward at 26 and a current dividend yield at 1.78%. The company is expected to grow at around 34% revenue in 2020 and over 50% revenue growth in 2021. They've seen inline and 2 positive surprises over the past 6 quarters, and you can see still rated as a buy right now, but not a lot of analysts taking a look at this company. 1 strong buy, 2 buys, 1 holds, and 1 sell. Looking at their financial position, the company right now is still expected to grow at a nice rate. Over the next 5 years, we're expecting 19.7% annual growth from TSM. It is rated as a buy, and the short-term price target sits around the $85 mark, so they are actually expecting a short-term decline in the company, but they overall expect it to rebound and grow at over 19% over the next 5 years. And because they do pay out a slight dividend at 1.78%, it has been growing at a massive rate each and every year over the past 5 years, and they have a payout ratio of around 54% of their earnings. So this is the sixth and final company on our list today, but is the third semiconductor, and those two areas within the tech sector, the softwares and the semiconductors, are expected to grow at a massive rate from Bank of America and their expectations moving forward into 2021. So please hit that like button, subscribe to the channel, and I will see you in tomorrow's video.